Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi dinar. If you want to stay informed with moment-by-moment developments about Iraq's economy, monetary policy, and financial markets, make sure to subscribe to the channel and like the video. Today we're examining one of the most frequently cited historical examples in discussions about the Iraqi dinar, the recovery of the Kuwaiti dinar, following the 1990 to 1991 Gulf War. Many online posts claim that Kuwait's currency moved from approximately 30 cents to around $3.47, while the country was still recovering from war, and they suggest this proves that dramatic currency appreciation can happen almost overnight in other countries, including Iraq. In today's analysis, we'll separate historical fact from interpretation, explain what actually happened in Kuwait, and discuss what lessons, if any, can reasonably be applied to Iraq's current economic situation. The recovery of Kuwait after the Gulf War is one of the most remarkable economic rebuilding stories in modern history. During Iraq's occupation of Kuwait in 1990, the country's financial system experienced enormous disruption. Infrastructure suffered extensive damage. Oil production was interrupted, and many government institutions were temporarily unable to function normally. Images of burning oil fields became symbols of the conflict's economic destruction. Understandably, many observers assume that under such conditions, the national currency should have remained weak for a prolonged period. However, the reality is more nuanced than many internet discussions suggest. Kuwait already had a well-established currency before the invasion. The Kuwaiti dinar was not a newly introduced currency, nor was it undergoing a speculative reset. Instead, Kuwait's government and central bank worked to restore confidence in an already existing monetary system once sovereignty was re-established. As normal banking operations resumed and the country's institutions regained control, the official exchange rate reflected the restoration of that monetary framework, rather than the creation of entirely new value. This distinction is extremely important because exchange rates are determined by many interconnected factors. They do not simply reflect visible damage to buildings, roads, or industrial facilities. Investors, governments, and central banks also evaluate institutional credibility, monetary policy, foreign reserves, fiscal capacity, external assets, and expectations about long-term economic recovery. In Kuwait's case, substantial oil wealth, significant overseas investments, relatively low public debt, compared with many nations, and strong international support, all contributed to restoring confidence in the country's financial system. When people reference Kuwait as evidence that currencies can suddenly jump, they often leave out these broader economic foundations. The recovery was supported by extraordinary circumstances that included rapid international military intervention, restoration of recognized government authority, continued ownership of valuable natural resources, and extensive financial assets held abroad. These factors created conditions that were unique to Kuwait's situation. This naturally leads many Iraqi dinar followers to ask whether Iraq could experience something similar. Iraq unquestionably possesses considerable economic strengths. It remains one of the world's significant oil producers, continues investing in infrastructure, and has undertaken reforms aimed at improving public finance, banking modernization, digital payments, and economic diversification. The Central Bank of Iraq has also maintained substantial foreign exchange reserves in recent years, which help support monetary stability. At the same time, it is important to recognize that Iraq's policy objectives today differ from the circumstances Kuwait faced after liberation. Iraq currently operates under a managed exchange rate framework administered by the Central Bank of Iraq. Monetary authorities generally prioritize exchange rate stability, inflation control, financial sector confidence, and orderly economic development. Sudden, dramatic exchange rate movements could create significant economic disruptions for businesses, government budgets, imports, exports, wages, and financial contracts. Another factor frequently overlooked in online discussions is the difference between official exchange rates and market expectations. Exchange rates are not determined simply because investors hope they will rise. Central banks consider inflation, money supply, foreign reserves, fiscal policy, trade balances, and overall macroeconomic stability before making significant policy adjustments. Sustainable currency strength typically reflects broader economic fundamentals rather than isolated announcements. For followers of the Iraqi dinar, this means that developments such as banking reforms, anti-money laundering improvements, modernization of payment systems, stronger public finances, investment growth, and increased private sector activity may ultimately be more meaningful indicators than viral internet claims, promising immediate currency appreciation. Recent years have seen Iraq pursue several initiatives designed to strengthen the financial sector. Digital banking adoption has expanded, electronic payment systems have become more common, and authorities continue working to improve transparency within financial institutions. These reforms may not generate dramatic headlines every day, but over time, they contribute to building a more resilient economic environment. Oil revenue also remains a major component of Iraq's economy. High energy prices generally improve government revenues, allowing increased spending on infrastructure, public services, and investment projects. However, dependence on oil also creates vulnerabilities, because fluctuations in global energy markets directly affect government finances. Diversifying the economy, therefore, remains an important long-term objective. Another important consideration involves investor confidence. Domestic and international investors typically seek predictable legal frameworks, stable monetary policy, reliable institutions, and transparent regulations. Improvements in these areas can strengthen long-term economic prospects, even if they do not immediately affect the exchange rate. The comparison with Kuwait should therefore be understood carefully. History certainly demonstrates that countries can recover from devastating conflicts. It also shows that strong institutions, sound monetary management, valuable economic assets, and credible government policies play essential roles in restoring financial confidence. These lessons are valuable, but they should not be interpreted as evidence that every country experiencing reforms will automatically follow the same exchange rate path. For Iraqi dinar observers, the most constructive approach is to monitor official announcements from the Central Bank of Iraq, government economic policies, budget implementation, banking reforms, inflation data, foreign reserve levels, and international financial assessments. These indicators provide a more reliable picture of Iraq's economic trajectory than speculative claims circulating on social media. Short-term developments in Iraq are likely to continue focusing on financial sector modernization, improving payment infrastructure, managing inflation, maintaining currency stability, and supporting economic growth. Progress in these areas may strengthen confidence over time, but they do not necessarily imply sudden or dramatic exchange rate changes. Looking further ahead, Iraq's long-term prospects will depend on continued institutional reform, responsible fiscal management, diversification beyond oil, investment in infrastructure, development of the private sector, and maintaining macroeconomic stability. These are the types of structural improvements that economists generally associate with sustainable economic progress. Historical examples like Kuwait remain valuable because they remind us that recovery from conflict is possible. They also demonstrate that rebuilding confidence requires far more than repairing physical infrastructure. Strong governance, credible monetary policy, international confidence, and sound economic management all contribute to restoring financial stability. For viewers following Iraqi dinar developments, it is wise to distinguish between historical case studies and direct predictions. Every country's economic circumstances are different, and past events do not guarantee future outcomes elsewhere. Responsible analysis involves examining verified facts, understanding economic fundamentals, and recognizing both opportunities and risks. As always, we will continue following official developments affecting Iraq's economy, banking sector, fiscal policy, and monetary framework so that you can stay informed with balanced, factual reporting rather than speculation. If you found today's analysis helpful, be sure to subscribe to the channel and like the video so you don't miss future responsible updates about the Iraqi dinar and Iraq's economy. Thank you for watching, and remember that this content is provided for informational and educational purposes only. It should not be considered financial, investment, or trading advice, and viewers should conduct their own research and consult qualified financial professionals before making any investment decisions.